Welcome everybody, my name is Mike Hamilton from Trade the Easy Way, and we are going to talk about the immediate 3 months ahead, and then ultimately the 2026 main predictions. And we're going to start off with a couple of fundamentals. If we look at the dollar index, let's strip a lot of this down. There's too much fuss, too much noise on this chart. Okay, so the dollar fired up in between 21 and 22, topped out in January last year, and has been weak ever since. So as long as there is no reaction, no fight back in the dollar, because if that dollar was to fight up here and start closing above, it's the dollar basket, so it's dominated by the euro. I can't remember the percentage now, is it 60% euro? So it's a basket of currencies up against the dollar. So if the dollar gains strength and starts coming up above the main one mark, above parity, so I was trying to grab the word parity. If we start coming up against parity and start reaching out for 22 highs, then we need to be very fearful, because that is going to be a run for shelter. So as long as the dollar stays low down here, I mean, it could come up against 102, that would be acceptable. Any sort of pullback into towards that middle range of the last year's range and fall over, then that would be acceptable, and I think that would support the markets. So a couple of things. I mean, gold is, as we all know, it's been streaking ahead. All pullbacks are getting bought, and here we are getting ever closer to $5,000 an ounce. So we paused here in summer last year, and then just went off to the races. Once we came back, once everybody got back from the summer, a little bull flag, and then off we go. We dipped again in November, and then once all the contract switchover had happened, again we got another little bull flag, and we are on yet another run. So I'm concerned about this. I mean, why, if the markets are so strong, why is everybody scrambling for gold? Because gold's a safe haven. It has very little function outside of a reserve. It's a reserve currency, and you know, apart from the jewellery market, it has very little function in industry. Silver, however, is different, because silver has a very key function in certain industries, and that is close to all-time highs. That looks as if we could come up to $100 an ounce on the silver. Incredible. You know, the key point here was September 22. We broke up in August 20, pulled right back to the breakup area. If I just isolate the breakup area down there at 1860, we broke down under 1860, and in October 22 we got above it, and ever since every little dip has got bought. Okay, so my theme for particularly the first quarter of 2026 is this. If you look at let's look at commodities. Let's carry on the commodity thing, because I think the commodity market is really, really interesting right now. Certain parts of it you are too late to if you want to get involved. If we look at natural gas, we'll start with something that is in decline this time of year. Chiefly, and the thing about commodities, and the thing about commodities is there is clear cycles to the commodities. Now, all in natural gas, all the contracts are signed and sealed and in place by, I think it's the second week in November. So what you tend to get is, while everybody's sunning themselves on beaches and so on, this one starts to turn around. So this turned around in February, March last year. So we were down here at 1960, and as the contracts are all in place for winter, we get up to 50, 52 and so on. So we are naturally, so despite the cold weather, this is falling back because cyclically all the main contracts are in place, and then this will fall back naturally until we get into spring and early summer. So that's the best time to start buying natural gas. And of course there is a transition going on for energy, so we need to be careful of this. Oil, so we've got geopolitics that are changing the future of oil, as is the transition into green energy and electrical car, electrical transport, etc. So oil is really struggling, but the impact of Venezuela is that if that goes ahead as Mr. Donald Trump expects, and he takes control of the oil market in Venezuela, it not only has the highest reserves in the world, it's a very high grade of oil. The other regions that have high grades of oil is Libya and Iran. But so that could mean that any push back into 60, 63 could see oil, but basically there's a lot of oil sloshing around the market anyway in the world. There's a lot of supplies are plentiful. There are huge tankers out to sea with huge stores of oil in them, because the transition away from oil has been in progress for quite some time. And however, the consumption of oil is not going to really fall out the sky anytime soon. We still rely on oil for transporting goods on the roads and the seas, so it's going to be quite a while before the floor can come out of oil. Some people are predicting oil is going to come and find these lows down here at $15-20 a barrel. I'm not one of them. I think we'll come and see, I can easily see oil coming down to here. So this has a bearing on oil stocks, etc. I can see oil dipping back down to late COVID levels of around about the $45 a barrel. I'm not convinced oil is going to, it could happen easily. 35 would be a key a ratio support at 35. So these are all levels that are possible if this oil drops under 54. So this time of year we might see a pickup. The normal cycle of oil is to pick up into the spring. All the contracts are in place for the US dry season. This is tradition. This is a bit out of date now, but oil could easily come up into the 60s, 65, 68 level, and then start to fall over. However, if we could even do less of that, 60, 63, if it's that bearish, bear in mind we're under 50-day average, we're under key levels of support. We've got a history of falling out the sky due to COVID, but I think this could be repeated. This pattern over here in 18 to 2020 it has already been repeated up here in summer last year. So any push into 65, 68 into the summer when all the main winter and summer contracts are been in place, I can see this dropping to 45, 35 and possibly lower. I think it would really struggle to get under 35, so I'd be wary of oil stocks. Right, let's move on because I'm consuming a lot of time for this. But what I really want to draw your attention to is metals. So this is high grade copper, has made a new high. Uranium, I haven't got uranium on my list, so I just have to go and find this one. Let's look at the uranium. This is a UK exchange traded fund. So uranium's got a long way to go. But copper is in a way, some people call it the new oil because of the extensive use in electrical car production and so on. And of course the other thing is AI. Copper is in demand because of the construction of data centers to handle the increase in AI. So this is copper and energy stocks like uranium have got to be high on people's agenda. In the meantime, the softs, in other words the grains, are still suffering. But look how corn is now staying above that 50-day average. Now I think these soft commodities have been too low for too long. If you're a farmer planning your next 2026 crop, what would you do? Would you plant corn and wheat when it's down here on these levels? Anybody who's reliant on corn, any farmer who's reliant on corn and wheat is really, really struggling. So that's knocking its head up against resistance. But I've been stuck in a wheat position for I can't remember how long now, a year or so. But I am going to be thinking about adding to that if these markets do well. Now, so corn just keeps above 450, and bear in mind, well, we're just about there now, give or take a few cents. I can see this getting above here and holding and running. So if we could break up, pull back, I can see this climbing to around $7. So here we are at 450. My prediction for this year is that corn can go and find $6 or $7. If we get any drought in the wheat producing and grain producing areas, that will accelerate this. Wheat is a lot poorer, but again, if wheat can at some stage soon sustain itself above 550, and we are 518 at the moment, then I can see wheat doing the same thing. So I think that for me this is a good one to look at. All these touches down here, this is like silver quite a few years ago. Silver was doing this. It could come out of that, but if it pops back up, so it comes and touches 5, pops back up, I can see that running. I would see 750, 850 for wheat if we can do that. So I'm not put off by these lows. I would not be put off by that coming and testing $5. What would put me off is if we start closing under $5 2-3 days in a row. Okay, so I like copper, uranium, the softs, i.e. the corn and the wheat, for long-term moves, and the stock sectors I like are healthcare, metals, and of course tech. So let's start looking at metals. So let's go back, let's stick to copper for now. This is FCX, the big US copper miner. I think it's the biggest copper miner. So that has made a new high today. So any pull back to 52, I can see that doing, and obviously there are lots of copper miners out there. Well, say lots. There are quite a few copper miners out there. So we may only see a retest of 54, but I would see that going to 61, 71, and potentially a lot higher. We are very high on the RSI here, so we could get a deeper pullback. But my bet will be 52 for that. I'm currently 56. So if you're patient, I mean, if that really pulls back for whatever reason, then 48 would be the ideal place to get in on something like FCX. So if you want to go away and look at European and other US miners that are related to copper, then that is my suggestion. The other UK metal related stocks are so just pulling them up on my other screen to remind myself. Right, yeah, Morgan Advanced Materials. So this is a weekly chart, by the way. I keep a very close eye on this one. I can see that getting, I think this is a buy around about the £2 2.20 mark. If we then close at some stage soon, close above 2.40, I can see this finding £3 3.20, and on a run, on a break, £3.50 £4. Obviously, to do that, it's got to stay above 240, see an increase in volume, and then start to climb. So I like Morgan Advanced Materials. I like. Sorry, bear with me 1 second. Sorry. So keep an eye on stocks in the metals environment, i.e. metal sector, i.e. copper miners, precious metals and other related stocks. The other sector I like is defence. So this is a weekly chart. So at the most recent low back in December, we were, this is Chemring, with 450. Not that long ago in September we were 615. So what we've seen here in May, when we ran up to 616, I think we are seeing now here as we start to close above, start to hold 490, £5. So I like Chemring. I'd need to see a decent increase in volume. If you're very patient, you might if this has a bad day, you might see 450 up. But at this stage, I think that's too pessimistic. I think this one is already. If we close like that this week, then I think that could stay high and run. If that holds this price level here, I can see it popping up to £7 and possibly £8. So we had this big run up here, and on first week in June, we're boomerang back to that breakup area. Well, I actually broke out in end of May, so we're boomerang back to the May area. We're holding that area. If we get back to these highs and ultimately keep going, those are my targets for something like Chemring. So it's a great, defence is a great sector. Lots of opportunities in the US and UK for that. The other stocks I like, SSP Group, called this one in the autumn. So this is a really this has been on a really nice little run. I think this has got plenty of scope. This is like a big box play to me. So the box is 133 to 270, and here we are right in we're just smack on £2. So any retest to 170 on this one, I think is a buy for a target of 270 or getting in towards £3. So we fell out the sky up here. Literally, this is these guys have 25% of a global multi-billion-dollar airport catering business. That's why we fell so hard and fast in the early pandemic. So we've 280 and 370, 450 would be targets for this if. And look at the volume down here. So I need to check their earnings. So I suspect they've got earnings coming. Well, they'll have earnings coming up. But any dips on that one to the 175 mark, I think is a buy on this. So I'll just mark that 175. That's where we broke out from in early December. So that's what I would like to pick that one up for. And the other, EasyJet is doing alright. EasyJet's 525 today. That's up from 450 to 525 from the dip in the autumn. I would be patient on that one. 495 on EasyJet would be my entry if that has a bad period. Sabre Insurance is 130. Call these up on it. I need to rip through this because I'm taking up too much time. Sabre Insurance, that's 130. That's recently been 135. I'm looking for that to me could be £182 if we see some volume in that one. I've talked about that. What's the other one? My failures of last year were the cheapies. IQE is down there at 5p. I was holding it up to 18 at one, and held it too long, didn't take profits, and that is in trouble. Vodafone is doing well. That's up to £1 from 65p last year. Pfizer, I like the healthcare sector, so let's look at Pfizer. I think so. The importance, as with all of our trading, is getting the right focus on the right sector. So we saw huge volume in November on Pfizer. We went up to 27.30, and here we are at 25.5. I think that this is a good opportunity to buy a pullback in Pfizer. If Pfizer and this sector, if that pops up above 28 anytime soon. I can longer term, I can see that getting to 35 plus. So the healthcare and pharmaceuticals and biotechs are good, because I think one of the industries that are going to make the most out of AI is going to be biotechs and pharmaceuticals. So that's why I like that sector. Anything you are looking at, shout now, because I really want to try and limit this to 30 minutes. Rent-a-Kill is ripping away. Close Brothers, hang on. Yeah, Close Brothers is sitting up. That's too high. Let's have a look at it. I'm not a great fan of financials at this stage, but it is doing all right. The sector's doing well. They got hit by the car loan issue, and they've been recovering since that was sorted. So from 182, they're here at 530, so they're having a fantastic run. 470 is the pullback on Close Brothers for a return to £8. So it fell hard this time last year from £8. If Close gets to 470, I'll be a buyer and look for that to attempt to get back to £8. Alright, let me just quickly gone past the 6:30 mark, so what else am I looking at? I'll just talk about what I'm looking at. Wise. We'll stick with the financial sector for now. This one, I've not checked out the fundamentals on this one, but that can hold 836. I can see that going to 120. So it's like this is a potential big bull flag here. Flew up in June last year, it's pulled right back here, so I'm interested in Wise. I'm just going to rattle through a few others and then leave this until we start doing an update. Conduit is having a good run. It's having a bad start to the year, which doesn't, well, that's fine. I was keeping an eye on Filtronic. I hesitated on Filtronic. That was down at 120. That's just testing 180. I'll come back to you on another time on that one. Advanced Medical Solutions. Okay, this will be my last one today. Advanced Medical Solutions. Talked about this a lot in last year and the early part of the year. Took my eye off it. But I think this one is building. Very acquisitive, aggressive organisation. That's the most recent high was 265. Yeah, look how we are basing here with increasing volume. So if we can hold above 230, 240, I could see this going back to £3, 330. Volume is looking healthier and healthier on that one. Right, anything you want me to look at, now's the time to say. But I am going to shoot off for now and then pick up on this end of the week and into next week. Alright, well thanks very much, and I will talk to you in the coming days and weeks. Alright, take care everybody, bye for now.